Welcome back to Morning Trade Live. It's time to go inside out on cybersecurity. Paul Powers is with us, CEO at FISNA. Thank you so much for being with us. People love cybersecurity. I mean, obviously it becomes more and more imperative with every passing day. At this point now, what are some of the biggest trends we're seeing? Maybe it's investing in AI. What does cybersecurity need to do to keep up with all those hackers?
Well, you nailed you hit the nail on the head right there. It's investing into AI for cybersecurity, and we see that with companies like Palo Alto Networks, with Crowdstrike Holdings. Palo Alto Networks just announced that they're pursuing an acquisition of Protect AI, which will help secure AI and ML environments, and they're also launching something called Prisma Airs, which is something that'll actually keep you safe while you're using AI and make sure that the outputs aren't being corrupted by third parties. So I think that's really the platform of the future, or AI is really the technology for the future with cybersecurity. It's not really a differentiation between those two areas of technology anymore, at least there shouldn't be. And for companies that adopt tools that use AI in cybersecurity, not only is it securing you from potential risks in AI, but the AI tools themselves can actually mitigate a lot of the tasks that your cybersecurity team would normally have to run at the company. So it actually will automate certain actions that you used to have somebody handle on your team.
Yeah, I mean, the company itself noting how the mad rush into AI led to this major acquisition. Is this only the beginning of this type of investment for cybersecurity companies?
I think it has to be. If you want to stay competitive in this market, AI is moving so rapidly that you not only need AI to improve your operations, like with CrowdStrike, they announced that they're laying off 500 employees. They're about 5% of their workforce. And there was some backlash about that. But at the end of the day, they're not actually reducing their overall headcount a lot. They're actually still hiring for key positions. They just were able to automate a lot of the tasks of the company using AI. So whether it's in the product itself to actually protect against some of the risks that are inherent to AI, or utilizing AI to make the tools more useful in a business, or it's utilizing AI in the cybersecurity company itself to make them more profitable and lower their costs, I think it's an inevitability that you're going to see AI's adoption in cybersecurity skyrocket from here.
Which names in the group are often there's really a clear leader in the group. Is there a clear leader for you in this group?
I'd be hesitant to say anyone's leading this just yet. And the reason why is you can't just look at, the earnings and say who's going to win this race. You have to look at the adoption of AI and how smart they are at applying it, and the foresight they're going to have. And right now, it's a little bit challenging to say who's going to win that race because we're at the starting line. The shot just went off. The runners are just left the mark. So saying that somebody's in the lead is a little bit challenging right now when it comes to AI and cybersecurity.
But I mean, when we think about how these stocks have performed, they've done incredibly well. CrowdStrike, for example, is up 27%, though there was a probe from regulators. But putting that aside, because there haven't really been developments with that. But it shows that this group has really bucked the trend of the market, has done incredibly well. Is that likely to continue in any way? What would spur and be the catalyst for more growth, maybe, for the stocks?
So what's going to be a big deal is who's going to win the platform game, right? So not just the individual AI tools, but who's going to become the overall platform that people adopt. And you see that just using the same two examples we've been using this whole time, Palo Alto Networks and CrowdStrike, they've both been going after platformization of their products, right? So what that means is a unified cross-functional security platform, which boosts spend by the customers, but it also makes the product more sticky because it's harder to switch, right? It's not just one aspect of a tool, it's an overall platform. And so by increasing adoption of the platform, whether that results in immediate revenue boost or not, I think one KPI that I'll be tracking is platform deals, when companies decide to use the platform as the overall architecture for cybersecurity. When you start to see one lead the way there, I think, again, aside from revenue, aside from earnings, aside from financial performance, that's going to be a great key indicator of what's going to happen in the near future. So whoever wins that race is going to end up performing extremely well.
It's funny because as AI is coming in, you are seeing some job cuts, but you're also seeing hiring, you said, right?
Yeah. Yeah, AI doesn't replace all jobs, right? You still need developers. In fact, you probably arguably need more developers now than you did before. They're a lot more proficient with AI, but everyone needs to kind of catch up right now. Whether you're a tech company or not, if you're not utilizing AI in one way or another, you've got you're actually at an existential crisis right now. I always tell people it's not AI that's going to replace your job in the immediate future. It's somebody else who's using AI better than you are, right? Because they're a lot more proficient. And so the companies that utilize AI are going to be hiring people because they're going to need to be able to maintain that advantage over their competition. Companies that don't utilize AI are going to see their earnings cut. They're going to see their profitability go down, and they're going to lose the race, right? They're also not going. They're going to make themselves irrelevant because all of the, I mean, across the tech sector, almost every tool has AI in it or will in the immediate future. I mean, within a couple of months from now. And so, if you have a cybersecurity tool that doesn't work in the realm of AI, doesn't utilize AI, your platform is going to become irrelevant in a matter of months. So I would keep an eye on, in addition to the regular financial metrics, and of course, both Palo Alto Networks and Crowdstrike earnings are up. I think Palo Alto is up like 14% or so year over year. Crowdstrike is about double that. But that's one indicator. But how fast they're adopting AI, how well they're implementing it, that's what I would be keeping my eye on if I'm a long-term investor.
Right. Also, I mean, there's just events that happen like our election, right? People started to worry about cybersecurity then. Russia, Ukraine, people were focused on cybersecurity then. Is there an event now today that makes us back to cybersecurity? And is there anything, whether it's regulatory or earnings or a deal in the making, that's on your calendar as a cybersecurity expert that we should put on our calendars? Something you're watching for this year, this month, this year?
It's a moving target, but there's a lot of regulations in the work around AI and around cybersecurity at the moment. And that's been the case for the past couple of years. Keeping an eye on what those regulations are is key. And then looking at what companies are best positioned to take advantage of those regulations is also key. They're increasingly becoming more and more mandates around, or standards are going up for the types of cybersecurity you have to protect yourself from AI and utilizing AI in cybersecurity, right? And the latter being more of a standard, the former becoming more of a regulatory matter, right? Like, how do you make sure that the AI that you're using isn't actually creating a security breach in your company? There are now cybersecurity tools for that, and of course they utilize AI to do that. And I've said for a long time, the best defense against a bad person with AI is a good person with AI. So AI-powered tools is important, not just for efficiency, but also actually to defend against AI. And the event that I'm looking at is less one big cybersecurity, hacking event or something else. It's more of an ongoing scale of the adoption of AI and how much that permeates our everyday lives. If you think about the amount of data that these AI companies are acquiring and are learning off of, and their ability to influence decision making, and like how important those outputs are, it's actually kind of scary to think about how cybersecurity, there's a whole new realm of threats from it. Even in the physical realm now, it's possible for people to manipulate designs that before they get manufactured and then cause problems later, right? So there are all kinds of things you have to watch out for in the cybersecurity space. We focus, at our company more on the physical, cyber physical side of things, and the risks with AI in that space are increasing, but a lot of people are unaware of it. So I think it's also a matter of marketing, right? How are these companies positioning themselves on that front?
Right. Paul Powers, CEO of Visna. Thank you, Paul. Good to see you. Appreciate it. It's time to trade these stocks. Don't go away, folks, because we have Tom White, host of Fast Market, here, taking a look first up at Palo Alto Networks, a name that over 1 year is up almost 32%, and had a high not that long ago, Tom. And you're looking at an example trade for us, and you're going to explain that. Good morning, Tom.
Morning, Cole. Yeah, the stock's only off about 6-7% from those all-time highs that we saw earlier this year. So cybersecurity stocks have been outperforming the overall market for sure. Palo Alto, they report earnings on the 20th, so we got a week until that report. That's probably going to be a catalyst either to the upside or downside. So I looked at a strategy that takes advantage of the higher implied volatility levels that we're seeing in next week's option series, and that's in the May 23rd weekly options that expire in just 10 days. So I looked at a call diagonal here to the upside, really short-term positioning. If you think this stock's going to rally post-earnings, this takes advantage of that using those that vol dispersion that we're seeing between the two option series. So going out to the May 30th weekly cycle, so 17 days to expiration, we're going to buy the at-the-money 192.5 strike call. And then in the near term, May 23rd weekly options that expire in 10 days, we're going to sell the 205 strike call. So a bullish $12.50 wide call diagonal to the upside. You're paying roughly about a $5.70 debit. It might be a little bit higher than that right now, closer to $6. But if you pay that $5.70 debit, that's your risk, $570 per spread. And your break even to the upside, where you start to profits, anything above about 195 on this type of strategy. And I mentioned that vol dispersion. Why is this costing less than half the width of the bullish call diagonal? Well, you're buying a lower implied volatility. You're buying about a 49% implied volatility on aggregate in that May 30th weekly options, where you're buying the 192.5 strike call, selling about a 59% implied volatility on aggregate in that May 23rd weekly 205 strike call. So that dispersion lowers the entry point price on this, but this is definitely a bullish trade. About a 1% move to the upside to get above that break even here for the call diagonal to the bullish side.
Okay, and look, I mean, he expressed optimism. We're seeing some of the analysts with positive calls here, higher than current levels. So not surprised to see your example trade to the upside. Let's talk about Crowdstrike now.
Yeah, this stock reports earnings in early June, so we've got a few weeks until they report and gives us more clarity on that. This stock's only still down about 5-6% from its all-time highs that we saw in February, above $455 per share. So, yeah, it's pulled back a little bit, but still outperforming the overall market that so far this year. Shares are up over 25% in 2025 so far. So I looked at something that's a little bit more conservative and avoiding that earnings event. The last example that I gave you in Palo Alto, that's actually taking advantage of that higher implied volatility going into earnings. This avoids earnings. So I went out to that same May 30th weekly options that expire in 17 days. You're going to avoid that earnings event, but take advantage of maybe a rally or maybe some consolidation in the shares, or even if it pulls back, I can still be profitable. So I looked at selling an out-of-the-money put vertical, where I'm going to sell the 415 strike put in the May 30th weekly cycle, and then buy the 400 strike put. So a short $15 wide neutral to bullish put vertical. I'm going to collect roughly about a $4 credit on it. Might be a little bit lower than that. The stock has moved higher. But if I collect that $4 credit, that's what I can make, $400 per spread, with about $1,100 in risk. But it takes my break even all the way down to $411 over the next 2.5 weeks. That's about 4.5% below the current share price. So like I said, you can profit in 3 out of 4 scenarios in this type of strategy, where if the stock goes higher, stays where it is, or even goes lower but remains above 411, you can be profitable on this type of strategy. That's the trade-offs, though. You've got more at risk than what you can potentially make, which is about $400, but you've got a better probability of success because you're giving yourself that cushion to the downside before you start getting hurt on a strategy like this one.
All right, Tom White, thank you for both of those example trades as we look at cybersecurity this morning on Palo Alto and Crowdstrike. Thanks, Tom.